Okay, so let's have a look at part 4 for the 2021 A. Kenny Sole Trader account. So during 2020, a storeroom which cost $75,000 and stock which had cost $24,000 were destroyed by the fire. So first thing we're going to do, we're going to need to reduce our buildings by $75,000. And then we're going to have to reduce our purchases then, because you won't be able to make this money back, by $24,000. And then the insurance company has agreed to contribute $90,000 in compensation for the fire. No entry have been made in the books in this respect to this fire. So, as I said, buildings is going to reduce by $75,000. Purchases then is going to reduce by $24,000. And insurance then, we're going to get an insurance of $90,000. That's going into our balance sheet as a current asset. Now, of this then, we need to find out whether we made a profit or loss. So let's have a look. We're going to take $90,000 and take these two figures away from. So you made a loss of $9,000. So that's going to be your expense in your profit and loss account. The second part of that then, a new storeroom was built by the builder's own employees. So the cost of labour was $44,000. It has been treated as a business expense, and the materials costing $38,000 were taken from existing stock. So no entry was made in the books in respect to this new storeroom. So our labour is going to be $44,000. So because they're our own employees, we don't pay them twice. So we need to reduce our salaries and expenses by $44,000. We are using our own materials, so we're going to be using our own $38,000. So we need to reduce our purchases by $38,000. And those two added together are going to give us the new value of our buildings. So our buildings are going to increase by 38, so it's going to increase by 82,000. So two parts to this adjustment. First, we're just identifying what's happening in the question. So during 2020, a stock room which had cost 75,000 and stock which had cost 24,000 were destroyed by the fire. So we need to reduce our buildings by 75,000. And we need to reduce our purchases by 24,000 because they're destroyed. We're not going to get them back. The insurance company has agreed to contribute 90,000 in compensation, so we're going to get 90,000 for this compensation. That's going to go into your balance sheet as a current asset. No interest made in the books in respect to this. So, and the one that they're trying to catch you out on is whether we're making a loss or a profit from this compensation, or we're making a loss of 9,000. So that's going to go into your profit and loss and your expense. Second part then, so we built a new storeroom by their own employees, and the cost of labour was $44,000. So our salaries and expenses are going to go down by $44,000 because they're our own employees. We're not going to pay them twice. It was treated as a business expense. And the materials costing $38,000 were taken from existing stock. So we need to reduce our purchases by $38,000 because we won't be able to get that money back. We used it for something else. No entry has been made in the books. Remember, you need to add your wages and your purchases because that's going to increase the value of our buildings. That's going to increase by $82,000. Let's do the adjustments for these then. So buildings. So you need to find out how much our buildings are. So our buildings cost us $900,000. Okay, we damaged the building. So we need to take away $75,000 from that. And then we bought a new one which was $82,000. So we're going to add those two together to get the new value of our buildings. So $970,000. So $900,000 is taken from the question. This $75,000 is taken from the first part of the adjustment, and this $82,000 is taken from the second part of the adjustment. Your purchases then minus 24 and minus 38. So we know we've purchases already opened up for working. So we're going to go back to that working. So you've purchases back here. So your purchases that we calculated when we took away the check. Then we will have your damaged stock then of minus 24. And then the materials that we used then, which were minus 38,000. So the new value for our purchases are $987,000. Our insurance then, so working 6, sorry. Insurance is going to be 90,000. And then working 8 will have loss on insurance. So that's going to be 9,000. So we've done our buildings, we've done our purchase, we've done insurance. So just last one then, working 9. We got salaries. So that's our salaries and general expenses. So in the question is 135,800. So you need to take away the wages from that. And the wages were 44,000. Okay, so let's have a look at that adjustment. So stockroom, which cost 75,000, and stock which cost 24,000 were destroyed. So we need to reduce our stockroom by 75,000, reduce our purchase by 24,000. The company had agreed, the insurance company agreed 90,000, so we're going to get 90,000. That's going to go into your balance sheet as a current asset, and then we need to find out where they made a profit and loss on it. A new storeroom was built by the business at a cost of labour of 44,000. So we're not going to pay our employees twice. We need to reduce our salaries by 44,000. Materials cost 38,000 were taken from existing stock. So we need to reduce our purchase by 38,000. And those two added together will give us the total value of our buildings. So remember, your buildings goes into the balance sheet as a fixed asset. Your insurance will go into a balance sheet as a current asset because it's due to us. Your loss will go into your expense in your profit and loss account. And your salaries then will go into your expense in your profit and loss account as well. We all know your purchase then will go into your trading account. And that's that adjustment completed.